All right, let's get rocking and rolling. It is Tuesday, June 24th, 2025. Income Navigator live trading for today. If you got any questions on anything you want to cover, pop them in the chat. We'll go through it. We'll try to cover as much stuff as we can in the time that we have on here. Trying to come up with some trade ideas. If you want to go over any current trades, existing trades, we can do that. Happy to cover any of that stuff with you. Let's jump into some charts. Well, let's start with the intraday quickly, and then we'll move to the bigger time frame on it. So let me get off here. You don't need to see me anymore, and I'll stop sharing. All right, let's rock and roll. So here we go, intraday chart. You can see this morning that we gapped up nicely. Big news overnight or yesterday, whatever. The weirdest I don't know, war's not a good example, but the weirdest thing of all time. So we'll bomb somebody and then a ceasefire and then it's all over. So anyway, I don't know if it's over. If it is, it isn't, whatever, it doesn't matter. We will trade what we see. My point to everybody has been for a couple of days now, stay off of Twitter. I'm on Twitter, but you don't have to listen to me or anybody else that's on there. I'm trying not to give opinions. I'm just giving trade ideas and things for you to take with you. So hopefully, as members here too, you guys just take the trade ideas and you determine what works for you. And the great thing is, you've got Igor giving you trades, you got me giving you trades, and if you go into the members trades section, lots of great stuff in there from Neil and Money Stream Dave and Abacus and Freight Train, everybody else that's in there. Time Merchant always giving great stuff in there. So shout out to everybody that's really active in the member trades. I think you guys bring a lot of value here in sharing your stuff, Lewis M. So anyway, I could go on and on pulling people out. But if you're sharing your trades, it's fantastic. Everybody gets to learn. You get to learn. Feedback helps you. Feedback for me helps me. When you question, well, why'd you do this? Why'd you do that? I think that makes you a better trader. So you should always be trading, I think, in a group. It makes you so much better as a trader. So lots of trade ideas. And yeah, there's some good people on Twitter as well. There's also some crazy people on Twitter. So you really want to just, if you find some ideas or you find people that trade like you or the trades that you gravitate to, jump on there. I've got some friends on there. I follow them. They do a pretty good job. I listed some of those on Twitter this morning too. So I'm always watching what they're doing as well. All right. Anyway, so bear with me. I just had, like I said, I just had surgery a little bit ago, and I'll probably be taking a few drinks as we go here. So let's jump in. So intraday, we gapped up, pulled back just a bit, and then it's just been kind of a steady march higher through the day. The on the 15 minute here on the left, MACD has been rolling over on the session ever since right around 10:15 this morning. But RSI has just stayed overbought. Stochastic momentum has not only stayed overbought, it's actually increased in the last 45 minutes or so. So it's gotten even a little bit higher. So I think it's a little just overdone. But this is a melt up kind of a day. It's on the all clear, lots of positive things happening out there, and I think it's just a little bit of relief. There's been a lot of money on the sidelines. I think we just keep inching higher. Now we'll get back away from, potential war news and oil news and all of that stuff, and we'll get back to tariff talk soon enough. But just ignore what you see or what you're reading out there, and just focus on the guys that aren't giving you opinions necessarily. They're just based on what they're seeing and the charts and what ideas are out there. So anyway, and the 3 minute chart here, we're close to highs of the day. We're just kind of sideways trending, trading in here, but it's like a melt up kind of a day. And I think that's all well and good. I felt enough here being above the 3 ATR on the 15 minute, being well above the uh, the opening gap and being outside the expected move that I felt confident enough to want to put on a zero DTE trade, which I did this morning. We're still in it. It may take some time with this melt up. If we get any kind of a pullback, it'll probably come off quickly. If we don't, if we keep just melting higher, it may or may not go our way. We're due for a loss. It's got to come at some point. Here we'll see what happens, but we're just going to keep playing the probabilities. Now, I did post something in the Zero DTE forum today, and if you go to the Zero DTE trade discussion, but if you look at the S&P 500, typically it moves about a half a point or half a percent per trading day on average. So the average move is about a half a percent per day. About 53% of the days saw a move of less than a half a percent, with the median daily change of about a half a percent. And historically, and really consistently in recent years, the average daily percentage move has always been around a half a percent. And most days you're between, 1 and -1, uh, even getting outside of that half. And when you look at that half a percent a day, well, at the S&P being around 6,000, you're talking at like a 30-point move. So a 30, 40-point move on the day. If you figure a 1% move is 60 points, I think if you go outside of 60 points away, or 1%, if you're roughly 1% away from the median or from the opening price or the prior day's closing, most of the time it should give you a pretty good opportunity to be successful. We could have traded in the direction of the trend today. I think that was one trade, trading put spreads early on, especially right at 10:06 when we dropped. I think this was the perfect time to sell a put spread. I was in surgery at the time. I didn't get out till a little bit later. So when I came out and came out of anesthesia there, we were already past that point. And then I felt, okay, we're at the top of the 3 ATR Bollinger Band. I'll go a little bit farther out of the money and place the trade. We'll see how it works. We might just continue to melt up, in which case we'll just see what happens to the trade. But I think if you guys did zero DTE today, you saw a nice opening here. Even though we were oversold, if you wanted this, obviously the trend was up, the gap was up, you've been moving higher. You could have put in a put credit spread and probably been out of that on the session today. All right, there's enough of the zero DTE talk. Let's see, question. Yeah, so looking at the expected move of the day, I think when we open significantly outside or above or below the expected move, I love the reversal type of a trade, thinking, we can continue in that direction. It really depends on what's going on in the market and what's going on around you as to whether you want to do it. Um, that way or not. But if we get above or below the expected move, and I can still get closer to that 1% move on the day, I think we're in good shape. And today, last night we closed right at 60.25 on the session. So 60.25. If you look at a half a percent or a 1% move, that's like 60 points. That would be 60.85 would be a 1% move. And we're right at 60.84 right now. So we are sitting right at a 1% move. All right. And my strikes are outside of that. So I feel comfortable. I feel confident with that it's at least a good trade. Do I feel confident that it's going to win? I don't know. We win, we lose. Don't really matter. Okay. We just place the trades, stick to our process, and we'll see what happens through the day. Just like everything else here, not every trade is going to be a winner. I analyzed all my trades. When I look at my trades, I think right now I have like a 74% win rate for the year. And as premium sellers, they're always going to have a high win rate. I mean, that's the bonus of being a premium seller. Mainly puts, but being a premium seller, the bonus is you're going to have high win rates. And right now I'm at 74.3%. I track everything down to the minutia. I want to make sure I'm on top of my game and knowing what's working. But I feel that if I've got a 75% win rate, I'm winning 3 out of 4 trades. I'm going to lose 1 out of every 4 trades. So hey, it's we get used to it. If you get upset that you lose a trade, a strangle or whatever, 112, any trade, if you lose a trade, it's okay. You're supposed to lose 1 out of 4. Okay, you can't win them all. So you just gotta, from a mindset standpoint, understand that losses are part of trading and we learn from our losses and we get better. But we also learn from our wins. And that was kind of the subject of a video a week ago Monday and a video last night that I did where I really just analyzed my account mid-year and what's working, what's not. Obviously, zero DTE has been working. So I might increase that, but as soon the day I increase that is the day it probably goes the other way. But I'll probably increase that a bit. And the 120-day 6 delta naked puts that we do, those have been a phenomenal trade for years. They withstood Volmageddon. They withstood any kind of sell-offs. Why? Because you're not laddering a ton of trades. You've got a good exit strategy, and you're only just one at a time trade, and you're out of the money pretty decently. So it gives you a good opportunity to hopefully be successful. All right. That being said, let's take a look at what's going on out there and see if we can identify some potential trades here. Now, what I don't love is, I mean, we are heading, okay, on ES back to these. Let's draw this thing across. Okay, that's the all-time highs right there. We are hitting very close to that resistance level today. Maybe we'll break through it. Maybe we want, 62, 6,300. Who knows? Dan, I think hopefully I'll get on to that one as we go. So we're getting close to this resistance level, but this is a new all-time high that we are within, a whisker of. I think the high was what, 61, 66? That was probably on that day. So 61, 66. We're at 61.38. So we're about 30 points away from new all-time highs. Maybe we'll hit that today. Maybe the market wants it today. But I certainly think we're going to hit that mark. Problem is, we are at the top of the Bollinger Band. Okay? We are definitely getting overextended on the stochastic momentum. RSI on the week, on the daily, still heading up, but we are not in overbought territory, which means I think we have more upside to go. It's not an ideal situation from an investing standpoint to start investing at market all-time highs. But remember, every previous all-time high, means that there was a previous all-time high before that. So you never get to an all-time high unless you break another previous all-time high. So you want to buy at pullbacks. I would love the pullback. I think the pullback on the daily here, you've touched this 21. 1, 2, 3, technically 4 times. But I think back here on Friday was a good opportunity to get in, hindsight being 50-50. And we've rallied off of that level pretty good. I don't see a lot of trade opportunities here. It's definitely not a strangle trade. It might be a 1-1-2 trade. I did try to throw one on yesterday in the middle of the day, but then we rallied intraday and I didn't get filled and I didn't want to chase it. Hindsight, again, being what it is, I think it would have probably turned out to be a decent trade opportunity, but we'll keep an eye and we'll see what happens. All right, but right now, maybe a 1-1-2 trade, but I'm not selling naked puts. I'm not selling call credit spreads. I don't want to get in the way of this train. I don't want to bet. I don't want to cap my upside because I think we can continue to rally more. I think there's more underneath this. And as I posted this morning in the Discord, I really think that I haven't looked. But I don't believe what everybody else. I think you got to do the work for yourself. But if you look at, can I pull up the Fed? I don't have it in front of me. I might do it, but I really think the Fed might move earlier than September. I think July is a very real possibility of the Fed moving, especially if we get any kind of clarity on tariffs, which was what's now back in the forefront is now we're back looking at tariff junk, right? But if we get that move, I think that's really bullish for the market. I think we head higher for sure the rest of this year. And any pullbacks, I think is an opportunity. And I think you buy the dip on almost any dip that comes up. All right. So ES, nah, not a whole lot of anything available right there right now. We might look at individual names. Oil, well, we know the story in oil. It has had a 2-day massive drop, going from 78 down to 64 here on oil, back to a previous resistance level. That might prove to be some support here. If you believe that all the hostilities are done, you're probably a little naive. But again, don't take everything you read about, oh, Israel's done, Iran's done, no one's attacking, the ceasefire, it's all great. We're all going to sing Kumbaya somewhere together. I think if something can flare up any day, any time. So I think you just be careful with what you're doing. So I'm cautiously optimistic on ES, but I'm also somewhat optimistic on CL here. I think this really sets up well for a 1-1-2 trade. I'm not going to put on like a put credit spread because I think we can still come down further. So I still think there's some more downside potentially to go on this, but a downside would not hurt us in a 1-1-2 trade. And if we look at oil, the IV rank, while it was up in the 80s, is now all the way down into the 40s. It's still elevated at 48. So I think 1-1-2 on oil is not bad. You could potentially throw a Jade Lizard on, which is basically the same trade. Uh, so yeah, I think 1-1-2 Jade Lizard on oil is good. Lewis, you just posted that too. I mean, that's pretty much my thinking in here as well. I love this pullback, and I love the fact that volatility is still elevated on it. So I think there's definitely a trade there. Gold, I really love this move on gold. I'm very bullish gold. We broke this short-term uptrend in here. And now we've really been, if you look at the weekly chart here, okay, we've really been in this consolidation range now for a while. We tried to break through it a couple days ago on the Middle East news as the market starts to sell off. But I think gold down here is giving you an opportunity. We've broken the 21. We're heading to the 50. We're nowhere near the 21. We're well above the anchor VWAP, which is down here. I think 3186 or so gives us some support down in this area, which is where the anchored VWAP is as well. On the weekly, 3200. Let's just call it 3200. Uh, I'm not saying we're going down to there, but the 50 EMA, the bottom of the Bollinger Band, I don't think this is a bad spot on gold. Now, I closed out my 1-1-2 for a nice profit on gold. I have a strangle on gold right now. That strangle is up 48% in 15 days. I might as well just take it off. I mean, why wait for 2% more and another several weeks when we could just take it off now? So I like what I'm seeing in gold. I'll probably take this strangle off in a few minutes. So we'll do that. So I think there's opportunities there on gold. I think a 1-1-2. I still think a strangle here on gold is an opportunity. And what I might do, since we've pulled back towards this 50 and here, this pullback I think is giving us another opportunity to get back in. If you look back 15 days ago or so, which is right around what, the 10th or so, this is where we were right at the 21 EMA the last time I entered a strangle, and we're in great shape now. So I think this sets up gold to do both a 1-1-2 and a strangle trade, giving us a bit of a bullish bias and then giving us the chance to go up or down and hang out in this area. So I like that on gold. All right, let's keep rolling. Let's go through the bond futures. Bonds with rates heading a little bit lower. So you've got the US dollar continuing to just fall here. So the US dollar falling, consolidating, maybe finding a base. We'll see. Still weak, but the Treasury now, as the 10 years continues to fall off of its highs. The 30-year here continues to fall off of its highs, which is giving bonds a nice little lift. If we're looking at TLT here, nice move up today on TLT. And if we're looking at ZB, same type of a thing here. If we can actually probably draw the same sort of range crossed here, extend this one out a bit here as well. Been in this nice consolidation range here, maybe trying to get a little bit of a breakout, but I don't think this is a bad opportunity on bonds. I still think selling bonds, just is one of the gifts that keeps on giving, I think in here. And I think you can strangle bonds here. We're already in or we were in a TLT strangle that came off for a winner. I think I'd do it again. Neil, I'd like to buy the dip on TLT into any weakness. Easing rates bullish. Yeah, I mean, that's why I was just, like I said, I was just saying, I think this is bullish for TLT, at least in the short run here. Uh, I'd still strangle because I don't think it's a huge upswing. But if the Fed starts to cut, or word of the Fed potentially cutting, I think bonds are really going to start to heat up in here. And I do like bonds, but I think strangle or 112s, any of those types of things could be good. And on any dips, I think that you buy, you had some opportunities at this support level. And when you look at TLT, if you prefer TLT over, this thing is just starting to break out from this resistance level here. We're up at the top of the Bollinger Band, but man, there is so much room to the upside on RSI and MACD on both the weekly chart and the daily chart. I think we're in the I think we're getting ready for a pretty good bond run. Covered triangle, Jeff, not actually a bad idea on these, and we'll talk about that. So we'll look at that trade. So I think that gives you the chance to have no risk to the upside, like a standard strangle, to enter a covered strangle trade the way I do it here. So I don't think you need to buy here, although you could, and then put a strangle on. I think what I'll do is I'll sell my two puts below. Let's take a look at that either on ZB or TLT. Let's do it on TLT. I think that's a better plan for that. But I think ZB you can continue to trade. We have a strangle on ZB. It's up 26% in 7 days. If you want to take it off early, there's nothing wrong with that. But I'm going to leave it on for now. So there's ZB. Copper, just been in this sideways trend as well for a while now. We can go back here. This is not going to be perfect. We'll draw some lines across on this. We've had a couple chances up and down, but really you've had some resistance in here. We could probably even move it up more if you want. Contain a little bit more of the total action. I think copper in here is pretty interesting overall. This won't cover all the action, but it covers most of it. Okay. I think copper is not a bad strangle here. You just got to be careful that we don't get a big rally or move to the upside. But as things start to ease, I think copper's not a bad strangle trade in here. Silver had this ridiculous breakout. And I'm still not really sure what caused silver to go so bananas, but yet copper didn't really move. But it's coming down now to a point where maybe, if you want to put a trade on, I'm not a big believer in silver long term. It's been a great strangle trade. I think it's starting to set up as a potential strangle now in here. Any more weakness on silver, I think you get a strangle. I want to touch on RTY, and there was a question too on RTY on premium selling. I like RTY here. I think this is really, really nice looking for small caps. I think you've got right now a ascending triangle. I think you're getting the breakout right now on small caps. Things look solid on the weekly. The weekly chart looks fantastic. For small caps, the daily chart looks fantastic. We're heading right back to the 21, or I'm sorry, the 200. So it could have a little overhead resistance here, but I think if we get this thing moving, Small caps is not the worst looking trade at all. Looks like a little bit of a breakout starting to happen. I think a little pop here is not bad. So we'll take a look at uh, selling premium then, Dan. Your question was RTY versus IWM. Yeah, we can take a look at both. I think it depends on, do you have portfolio margin or not? If you have portfolio margin, then you can, and then I think IWM's a viable trade. If you don't, then I think RTY is probably a better trading opportunity. But we'll take a look at both in here. All right, let's go quickly uh, in here and take a look at what's going on in the rest of the market here. Amazon having a really nice day today. This is a beautiful bounce off the 21. The 21 is above the 50, is above the 200, and you had a golden cross. Okay, so golden cross just happened on this thing right here, right? Which means the 50 just broke above the 200 on Amazon, and you just bounced off the 21. I don't think this is the worst time in the world to get long Amazon. I would consider, I'm already in it, but I would consider something on Amazon in here if you want to look at stocks. Nvidia, okay, you already had essentially the golden cross back here. So that it just happened back here uh, a couple weeks ago, and it's off to the races. I think it's a little bit gone for me right now on Nvidia. It's a great company. I would just like to see us um, come back to earth a bit on this thing, and we'll see. I don't know really where this line gets drawn. In fact, I'm just going to take it off because I don't think it matters right now. I just think it's a little bit, it's getting a bit overbought, and any pullback here, I would be buying the dip. Hood, same thing. It's getting gone. Any pullback to the 21, buy the dip. Okay. Palantir. Interesting consolidation right now on Palantir. Okay. This is not perfect in here by any stretch, but there's some resistance. We've hit it for 3 days in a row, knocking on the door, haven't broken through. It's not quite overbought despite this ridiculous move to the upside. I think Palantir is an interesting play here that it could be ready to roll even further to the upside on it. Tesla had a monstrous day yesterday. So huge day yesterday on Tesla, which again is stacked 21 above the 50, above the 200. So it's stacked, even though you would think it's, based upon what you read and pay attention to, you think Tesla was going to zero, but actually Tesla's in pretty doggone good shape. And I do like where Tesla is. And it was a trade that I had suggested in the Discord. So if you guys are looking for trades, take a quick look at the trades I put out there to Tom's Trade Ideas. So we had Berkshire Hathaway, we had UNH, we had Chipotle, we had Gold, we had GEV, Snap, SMCI, Costco, Tesla. Not only did I have Tesla, but I also suggested TSLL as well, because I felt we were consolidating in here. This was a beautiful consolidation range. Okay. Nice consolidation here. And what I said was MACD is rising. You can see MACD has been rising. RSI is just starting to get going. Here, the weekly looks fine. You're above all the moving averages, bouncing off the 50 here. Everything's rising. I just felt that Tesla or TSLL, either one, was a good idea. And I suggested selling a naked put on Sunday on this thing. So unfortunately, yesterday we popped up so much, I couldn't really put that trade on. It is giving up a little bit of it today. I'd rather be closer to 21, but I don't think you can go wrong maybe selling some naked puts in Tesla here. So I like Amazon. I like Tesla for a naked put. I like Amazon for anything long. Meta, it's a little bit gone, breaking out resistance okay, here today. and a pretty nice ascending triangle. We can go back further, but you guys get the point on it. All right, so there's where we are right now. This thing could be setting up for another pretty good move to the upside. I think there's room for all of these stocks to be running. So Igor, short and naked put in Tesla. Yeah, I mean, if you've been in that before yesterday, I think great. I think today you're getting maybe a little bit more of an opportunity if you weren't in it. So we'll keep an eye on where we are on that. SPX continues to increase as we talk here. We're up 64 points on the day, 60.89. All right. Google. Let's get to it. All right. Google. I don't like it. You're at the bottom of this trading range, but I think this is an opportunity. If you want to do something to find risk, I think this is interesting here. I don't love Google right now. It is not one of my favorite stocks. You've been in this range though, and every time we hit the bottom of this range, we've rallied to the top of the range. If you extrapolate that out a bit, and again, Google's not my favorite company right now, not a gigantic believer in everything Google, but I mean, right here at the Bollinger Band, the bottom of the channel, the 3 ATR, I'm sorry, the anchored VWAP here as well. You're right at the 50. I think this is a great opportunity. If you believe in Google and it fits your trade, I think this is a perfect put credit spread opportunity. I would define my risk in here. But if we're going to get a bounce, which maybe we are, I think this is a really good time. You could sell a naked put here too if you have that belief in Google. So I think a naked put, I think this is the best setup of all of the ones we've seen so far. All right, I'm going to skip Microsoft because it's way up here. There's nothing I would do with that. Apple, I think you're finally getting a bit of a turn on Apple here. I think Apple is also another one, if you like it. It's not my favorite, okay, but I think a put credit spread or a naked put here on Apple. I'm in a poor man's covered call on Apple as a trade. I think that's a good opportunity here. If you really like Apple in your investing account, I think right now you're getting one of the best discounts on Apple if you believe in it. And this is one of your favorites. You really can't pass up the opportunity to get long here, Apple, if it fits your plan. All right. So I like Apple. I like Costco. Costco was one I gave this weekend. I talked about the pull 8% pullback from the recent highs, bouncing off close to this 50 fib level here. So we'll take it off, getting back above its 21, which is above the 50, which is above the 200. I had a big day yesterday, some pullback today, kind of like Tesla here. I don't think Costco's a bad opportunity in here either for maybe a naked put or put credit spread or something along those lines. HIMS, right now it's off the table. 3-day rule is in effect. We have the gap down. Let's give it 3 days to see if it bottoms out. I like HIMS. I talked this weekend about this cup and handle. Okay. But since we hadn't broken out, we didn't get into it. And then yesterday they got hit with the news that Novo was pulling out of Hims and Hers, which is a pretty big hit to Hims and Hers. Not that it's not going to kill them. And if you really like the company, then you should really like it now. I don't know if I like it as much now with Novo Nordisk not in there, but let's give it a couple days to chill out. If you're in it, I think you got to weather the storm. If you're not in it, it's a no-go right now for me. All right, JP Morgan, too high. Mags, I think is not a bad spot for here. It just bounced off the 21 EMA again. It's not the worst thing in the world. All right, let's take a quick look at a few other things here. I think Netflix, a little far gone right now. SoFi getting moving. We have SoFi as a poor man's covered call in the investing account. I think that's doing great. Uber, you know I like Uber. I'm in Uber. Uh, we've got a put credit spread in Uber. This thing's up. Oh, it's actually up 90% now in 13 days. I think we'll be taking that off today. But I love Uber. This was the best opportunities that you have gotten in months. Once here, once again here. That's why we were long. We got long on this thing 13 days ago. And boom, look what happened on Uber. So great trade. If you guys are in it, we make some money on Uber here. Loved it. AMD, it's getting gone right now. I don't think I'm chasing it up here. It would have to come back down. AVGO was another one that was consolidating, starting to move. Might be an opportunity for you. Berkshire Hathaway, I told I told everyone to get into this thing about a week or two ago. I'm still serious about it. Berkshire, I posted it yesterday morning that we were right at the 200. I said yesterday morning this was the opportunity potentially of the light, not maybe of your lifetime, but of some people's lifetimes. You don't get in on Warren Buffett at the 200 moving average very often. It happens like once or twice a year. You're in there. I mentioned it yesterday. Get long on this thing. So if you did, congratulations. If you didn't, yeah, you haven't missed the boat totally yet, but the boat's pulling away from the dock, and you're going to have to jump if you want to catch it. This boat's moving. But I did talk about a poor man's covered call in Berkshire yesterday. So if you did it, yeah, Jeff did it. Good stuff. K-Fall did it. Jeff Valentino did it. Yeah, I think that was the play yesterday that I called out like 9:25 so yesterday morning. I think that was a good opportunity. I didn't do it, but I still can. You still can. I think this is just a great entry point on Berkshire here. Uh, to add to it. So there you go on Berkshire. I had Chipotle. Talked about this yesterday. I said get long on it. We did. We just sold a put. Probably should have bought something. Should have bought a call, then sold a put. But either way, I'm up 30% in one day. So if you got in with me yesterday on Chipotle, you're making some cash today. We're up 30% in one day on this thing. But I mean, that was a great setup. I mean, look at this setup. Okay, ascending triangle, bam, no, 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 starting to move, breaking above it, ascending triangle, RSI is cranking, stochastic momentum, everything is telling you this freaking thing is going higher. So if you got in yesterday on Chipotle, we got in, we're up 30% now in one day. So K-Paul, yep, got in, making some money. Beautiful stuff. ARM, a little too far gone now. So a lot of these things are just getting a little bit away from us. SMCI, this thing has a pretty nice cup and handle formation. It's not an easy one or a pretty one, but I think this was it. A nice pullback yesterday, moving up today. I'm not the giant fan of this company, but I think if you like it, this is not a bad spot on SMCI. I don't see it. I don't think it's ready yet. So just let it percolate a bit and let it consolidate here. But I think pretty soon you're going to get an opportunity to see a breakout on SMCI potentially. All right. Really quickly, I know we spent a lot of time going through charts today. Lilly, somebody asked me about Lilly earlier. If you like Lilly, this is not the worst spot in the world on Lilly to get in. You've had a pretty nice downtrend, okay, on Lilly from these highs. Okay, so we haven't broken the downtrend yet, but we're getting closer. And now we've got a bit of a symmetrical triangle pattern showing. There's weakness here. It's just kind of stale. It's not my favorite thing in the world right here. I wouldn't be betting the farm on Lilly, but if you like it and it's one of your favorites, it's a great spot. For a trade, I want to see a little bit more move to the upside. I'd like to see this 21 get above the 50. I'd like us to get above the 21 and the 50. We're still below the 200. If it's a long-term poor man's covered call, or you want to just own it, sell calls, or just own the thing, I don't think this is a bad spot to get into Lilly. If you want to trade this, I think there's a better trading opportunity coming down the road. Uh, Vertiv, we talked about that, but also GE. Let me hit the last couple here quickly. On Reddit, I like Reddit. It's had a nice breakaway here, maybe getting a little consolidation, which would be perfect. Any pullback here on Reddit, I think will be an opportunity to get longer. So I don't mind Reddit. And then UNH, it was starting to build what I really think looks like a bit of a bear flag down in here. Okay. So we had this big flagpole drop and then this slow grind up and then started to break down. Today it's saving it. I'm not saying it's the worst and that we're going to go down further. I think I just want to be cautious in this area, but I did use this to do a poor man's covered call here. I'm still I am still playing UNH here at these levels. You've got an IV of 26, which is not outstanding, but we just almost every week now we have written a put credit spread or just a naked put, either one. And I just put a naked put on this on Friday, which is now up 13% in 4 days. We've got another one up, put credit spread up 47%. I got another one up 72%. And then we just entered a poor man's covered call on this thing yesterday on that drop, which I think hopefully was a good trading opportunity. I think this thing goes back to 400. Jason Hartman, good friend and trader out there, options growth trader. He believes this thing's heading to 400. He and I are on the same page with this stock. I think I'm just going to keep selling puts down in here. It's the gift that keeps on giving until it doesn't. All right, that's enough. Real quick, Bitcoin. I keep saying it's enough, and I go look at something else. Bitcoin, just consolidating here. These last 2 days have been great for Bitcoin. Back above the 21. Bitcoin, this was the opportunity right here. You came down, hit support, rally. Came down, hit support again, and we're back in the rally mode on Bitcoin. 2 days ago, on Sunday, that was the opportunity on Bitcoin. If you're an IBT trader like I am for Bitcoin, then yesterday, I think that reversal was what you wanted to see. You got a bit of a hammer candle down here at these lows, right at the 50, right at the Bollinger Band, right at support. That was a great entry point on IBIT yesterday, gap up and rolling today. And MicroStrategy, basically the same type of a setup. Today we have triggered a bullish PSAR signal off the bottom of the Bollinger Band, back above the 50, back above the 21 today. This thing, if it starts getting some momentum back, I think this thing, it is tightly coiled. I don't have the squeeze open on here. I don't know if I have, we keep going higher on these things. The squeeze, let me get back to here. I think I have it on one of these charts, so maybe not. I don't have the squeeze on here either. I could probably pull up my toss or something, but if we look at the squeeze, I'm guessing this thing is going to start to squeeze pretty soon, but look how tight these bands are. The Bollinger Bands are. This thing is tightly wound. I think you could be ready for a MicroStrategy move to the upside, or strategy as the company is now. All right, that's a lot. Let's get into a couple of quick trades. I think I spoke way too long on charts, but you should have, right by now, you should have 10 trades minimum that you guys can jump into today if you want. All right, so let's take a quick look at a couple of trade opportunities. So we do have oil on, and this thing is sitting at 60% winner in 35 days on oil. I think a 112 here is not a bad trade opportunity. IV is still elevated. We're still falling further today, so I think we have more to fall, but I don't think that's the worst. I don't think falling is a bad thing. So if we look at, let's say, a 52-day trade on oil, I don't, we can do one wide here, and then let's go down right around 7-ish delta. I think 48 is really low, but we may want to go higher. But if we take the a 112 trade here on oil, let's take a look at what this thing looks like. Okay, so here's a 112 trade on oil. All right, so we're making 590 in the tail on 5,400 in buying power. I think that's a great trade opportunity. So I'm going to actually put this trade on 48 for the downside. The lowest we've hit this year was around 55. Doesn't mean we can't fall. We may get some more selling on this thing down here. I think that's okay. Maybe a little red for a while, but I think you got a good trap chance here. We're going to throw this thing on. Okay. So I'm going to throw a new 112 trade on oil on this. Let's see what else we got. ES, we're going to ignore. There's nothing on ES that I want to touch with. Our naked puts of our 112s. We got one at 78, one at 67. Nothing to do there. We've also got another one here at 38% in 8 days. Nothing to do there. We've also got our 120-day trade. It's at 31%. We're taking it off at 40. So we're getting there. We'll make some cash on that thing, at least at the weight rate we're going. Gold, Strangle, loving today. This thing's up 48, almost 49% in 15 days. I see no reason to hold on to a trade that I shoot for 50% in 30 days when we're at 49% in 15. There's no reason to hold. So let's take a look there. We might not get filled. I don't know if I want to go 7. Yeah, let's just do it. Yep. Boom. We'll take the money and run another winner. And that takes us out of gold. But I want to actually maybe get back into it. So we talked about a couple gold trade opportunities today. We talked about a 112 or a strangle in here. I'm going to look more at a strangle in gold. IV 30, so it's not bad. I'm going to do kind of the standard 7 delta 29.85. Where's that put me, by the way? 29.85. I'd like to go a little bit lower, so we might look at like 29.75. That's not much lower, but 29.75. And let's make this thing wide. 39.50. Okay. So right now on this one, we'll take in about $1,730 on 6,300. It's a pretty good rate of return. If you calculate it out, 1,730 on 6,327. That's 27%. So it's my 25%, in credit to BP is my minimum, which I'm looking to get. So this thing fits all of that criteria. And I don't have to do much of anything. I don't have to go multiple trades. Let's see if we can get in on a strangle in gold. And let's see, ZB. We've got the strangle. This thing's up 26 in 7 days. I'm going to let it cook, but we'll put something on in TLT. All right, so TLT, we talked about potentially doing strangle, which I think you could certainly do. But I'm actually going to run into a 30-day. Let's take a look at this. Yeah. We're going to do a 30-day TLT, and I'm going to do a covered strangle. And the way I enter a covered strangle is I will first sell a put around 12-ish delta, so right about the 1 standard deviation. We'll sell that put, and then we're going to go down a little bit further and sell another one. Boy, this is it's not going to give me much width. I mean, 81, we'll see. So the first one approximates buying the stock and selling a call. Buying the stock and selling a call is the same thing as selling a put. So buying the stock, selling a call, and then selling another put on top of that kind of equivocates a bit of a I don't know if I should go down that far. Let's pop it up a bit. Uh, Here, do we want to go any more? And I wouldn't mind getting assigned on TLT at 83, probably even at 84. It's not the worst spot. You know what? Let's go 84 and 82. Let's do these. So if we get assigned on both, we'll own it at 83, which is perfect. If we get assigned on the 84, we'll make the money from this, and we can start writing more covered strangles on this trade. And we'll go up to about 10 contracts. We're going to take in 460 bucks in 30 days on 4,800 in margin in a PM account. Not much, but we can afford 10. That'd be 1,000 shares at 87, be 87,000, but with our margin, we won't be anywhere near that. So let's take a look at putting this one on as well with a potential covered strangle. So Jeff, that's kind of the covered strangle we discussed a bit earlier. What did I say? Chipotle, I mean, 30% in one day. I don't know. Do we take this thing off at 30% in one day? It kind of makes sense to do that, but I kind of want more. Um, but I don't want to be greedy. I'm going to sleep on that one for a minute. MicroStrategy, fine. We're losing on the calls. We're gaining big time on the leaps. Okay, we're fine. We have 816 of extrinsic, so we're not going to touch that thing. Qs, same thing. We're down to 94 in extrinsic, not going to touch it. SPX, we're just down on the 0 DTE for now. SPY, we've got the covered call. We still have $400 worth of extrinsic, not going to do anything. We've also got this SPY strangle that we did. This strangle is now up 21% in 14 days. I'm not going to touch anything there. That was in case we sold down on it. So Kevin, got to mute you. All right. So I'm not going to do anything in SPY. TLT, we got a trade going on. The Uber trade, it's a winner. It's at 94%. We can't get any more out of this thing than we already have. We'll actually look to get out. We'll see if we can get filled here. But that Uber trade, nice 450 bucks in 13 days. We'll take that. Here, so is there any other trades you guys want me to model up in here? There was one question. Okay, I showed the TLT trade. And again, TLT, if you wanted to do it instead, you could simply do like a 90-day strangle. Again, 7 delta, 6 delta. So something like this 77, 100. I mean, it has not been to 77. It's never been to 77. Okay, so TLT has never actually been that low, and the lowest TLT has ever gotten to was 82 in its history. So doesn't mean it can't go there, but this strangle is not bad. In fact, geez, we have to do a lot. Let's go 25 contracts on this thing. In fact, let's go 30 contracts on this thing. 1350. I mean, 1350 on $3,000 for this strangle on TLT. I don't know. I like it. I'm going to do it. Okay, so there you go. There's a strangle and a covered strangle. If we get filled on one of them, I may cancel the other one. Let's see what happens. Any other questions? There was a Berkshire question on Berkshire Hathaway. This was the poor man's covered call opportunity. The one I posted yesterday was I didn't really give the strikes, but I would probably go out about 350 on Berkshire, go out a year. I'd probably go down to around the 80-ish delta. You can go more, 85. Just look at the extrinsic. What am I paying? I mean, the farther out I go, the less extrinsic I pay, which means the less I have to pay off, and the more reactionary it is. It's just going to cost me more. So it's going to cost me, instead of 6,600 or 16 grand to do it, 13 grand. So it cost me $3,000 more to go down further, but I have less extrinsic to pay off. I only have 20. I have $20 worth of extrinsic to pay on Berkshire. So $20 of extrinsic to pay if I bought the 350. I'm writing notes, by the way, so I didn't keel over. It's $20 of extrinsic for about 166 bucks. Okay. It's not a bad trade. I kind of like it. Maybe we should do this one anyway. Who wants to buy this thing? Let's see. I'm going to do it, but we're going to do it in the lazy trader account, which is the account we should do it in. We're actually going to buy and trade this thing. So we're going to trade this thing, right? I just bought the leaps, and then I'm going to sell, and I'm going to sell out of the money because this is an investment. I'm going to go 9 days out, and I'm going to go around the on Berkshire. Give me 2 seconds here to make a decision on the delta for this thing. And I approximate, how my delta is based. If you read the trade plan, the delta for the out of the money calls, this is not an at the money strategy. This is an out of the money one because I want the appreciation at these levels on this. But out of the money is determined based upon, are we above the 21? What are we doing? We just kind of creaked above the 21 today. So we have which one did we buy, by the way, on Berkshire? Oh, sorry, I'm in the wrong account anyway. What DTE did we just buy? I think that was the 360. Let's go back. So 360 days, it's 52 weeks. We have 52 weeks to pay off $20 of extrinsic. Okay, so if I just make $1 or $2 a week, I will pay it off in half the time. I could probably make more, but I think right now, let's give ourselves just a little cushion. And we're going to go out to this 21 delta. So it's a little farther than the 30. 15 to 20 is what we talk, 15 to 25 is normally what we talk about when we're in a bullish trend on the investing account. So let's try to get a $1.29 for 2 contracts. Bingo, got it. We'll post it. Making some money. So there we go. I think that's enough. Question, Tom, do you trade covered calls on futures? Say buy oil and then sell calls against it. Yeah, yes, you can. The problem is that when you trade something like an oil, and we got filled, but when you trade something on oil, you have to watch the expiration, otherwise, of the actual futures contract itself. So if I buy an oil contract, which oil contract do you want? I would want to go out a little further. So I would want to buy, let's just say this X5 contract, okay, which is the October. That's the X5 contract that expires in October. I might start with buying that one, okay? Or at least you can't, I guess I'm selling, if I wanted to maybe wheel it, I would maybe sell this to get assigned. And if I get assigned, then write it. But if you're buying the current futures contract, it's going to expire in July, which means you've only got 2 weeks, 4 weeks, 3 weeks, something like that, 3 weeks. You've only got 23 days till the underlying expires. It's not the worst thing, but you will have to roll the contract from the L or from the Q5 to the U5, which expires in August. So just bear those in mind that you've got an underlying contract that will also expire. So it's not like owning a stock where you just hold on to it. You will have to roll the underlying. It's not the worst thing in the world, but you could get some slippage or something based on buying that. But essentially, you would just close the current contract and then rebuy a new contract, and you can do it. So yeah, you can absolutely write covered calls on futures. All right, that's it for today. I got to run for you here. I got to take something for the pain, and we'll let you guys go. So hopefully this was helpful today, and we'll catch you guys in the Discord. So appreciate you guys being on board here today. We'll get this posted as soon as we can. I got a busy day, but I'll get it up for you. All right. Take care, everybody. Have a great day. See you guys.